So, one of the first questions that people kind of ask when they're learning about real estate is how is it different from stock investing? So, if you're thinking about, building a better future for yourself, you kind of look at the opportunities and you're usually staring stock investing and real estate in the eyes.
Yeah.
So, Wayne, can you kind of go over some of the differences between the two?
Yeah. It reminds me of when I was building up my career. I was in my early 20s, and this is when I first started thinking about real estate investing. And what had happened was I got my big raise. I got that ticket, and then I got that big raise. And I don't know, call it like a early 20s midlife crisis. I was going through a bit of a crisis because a lot of things were changing in my life, and then it was all happened rapidly between like the ages of 21 to like 24 or something like that. And I was building a career, and I met the girl of my dreams. We're talking about getting married, talking about having kids and stuff like that. I reached the ceiling. I peaked. I peaked at work, and I got the ticket, and I'm like, okay, I'm not going to make much more. The only real way up is through, like, I don't know, going through like that tiny little funnel of like all the technicians who can get into management. So like my big thing was like, okay, I'm going to climb the corporate ladder, and I'm going to get into management. I'm going to get into upper management, and I don't know. It seemed like there was so much happening in life and so much opportunity, and then it all just kind of like went like this. And I look at myself, and I'm like, whatever, I was 24 years old, and I'm like, is this my life? Is this all I have for the next 40 years until I retire? I'm just going to be this guy. I'm going to make this money. I'm going to have a kid, and that's it. And it was, you know what? I'll say it. It was like an early, like midlife crisis. My existence was being questioned, and my potential. And I don't know. I just, when you spend your early 20s, just reaching for the stars, and then you kind of get there, it's like, oh crap, like what am I doing here? And so I started having I started thinking a little bit more about like what other opportunities and side hustles I can get into. And also I was also thinking about like what am I doing with my life and my future, and becoming a dad, and thinking about that type of stuff, and what am I going to do about education and retirement and stuff like that. So I really started changing my focus on what I was putting my energy and my thoughts into. And so I started thinking about investments, and I was looking at it, and first thing everybody does, they look at stocks, so they look at real estate, right? Like, which one's which? What's different? And they are two very, very different investment types. And what I really liked about real estate was that it's a hard asset. It's something I can touch. You can buy shares in a company on your phone, on TD, investment app or something like that, and there it is. You own the shares, and you watch the market, and the value of the share can go like this, or it can go like this, and you just watch the value of your investment going up and going down, right? And hopefully it goes up a little bit more over time. The hard asset, I can go drive by it, I can touch it, and I can do stuff to it, and I have control over its success. And that's what I love the most about it, is because if I go buy Coca shares in Coca-Cola, it's not like I'm going to be sitting on the board. You know what I mean? Like, I don't own enough shares to have any say. I can buy it, right? I can buy them at the store. I can buy a case. I can tell my friends to go buy it, and hopefully, the profits do really well that year. But I have zero control over it. If I buy a hard asset, I buy a rental property, I have total control over it. I also have total responsibility, which I love. I am 100% in control of its success and its failure. I cannot blame anyone else other than myself. And I freaking love that. I love it. I'm sure a lot of you guys do too, as entrepreneurs, as the type of people that want to get into something like this. You're kind of, I don't want to call you a control freak, but you like to be in control. You want to succeed, and you like being a part of it. You want to be in control of it. So I like the control over its success and its failure. I love that accountability to it. I love that if it's not performing well, I can fix it. I can change it. I can do something. If it is performing well, then I can pat myself on the back. Now, the big thing about the difference between stock investing and real estate investing is that see, if you want to buy shares in a company, you have $100,000 and you want to invest it, and you want to buy Coca-Cola shares, you take the $100,000 and you buy, whatever, 100,000 shares, or however much it costs. But you have $100,000 in that investment. And what you're hoping is that the shares in Coca-Cola go up or they go down. And as they go up by percentage, the percentage equal to will your investment will increase. If the share goes up by 5%, your $100,000 investment goes up by 5%. If it goes down, it goes down. Right? And real estate is very similar. If you buy an asset, you buy a house and it goes up in value, then yes, the value of your investment will go up. But the cool thing about real estate investing is that you can leverage mortgages, financing. There's no financing for stock investing. You can't say, hey, bank, I'm going to buy $100,000 worth of Coca-Cola shares. I'm going to give you 20% and I'd like you to finance 80% of it. They don't do that. But they will do that for a piece of real estate. And that's a very cool thing. If we're just talking very one-dimensionally about buying a house and the value of the house going up or going down, forgetting about the other profit centers, you buy a house. You want to buy a $500,000 house. It would cost you $500,000. But what you can do is you can call the bank and say, hey, bank, I'm going to want to buy this house. I'll give 20%. Can you give me 80%? They say, sure thing. They're like, you bring $100,000, we'll bring the other $400,000. So the same $100,000 can buy a $500,000 asset in real estate. But if you're investing in stocks, you can only buy 100,000. So what happens if both of these go up by 5%? Your house goes up in value by 5% and the Coca-Cola share goes up by 5%. See, if it goes up 5% in Coca-Cola, you get 5% on $100,000. If it goes up 5% on your house, it's 5% of $500,000. You just 5x'd your returns. 5 times the returns. And that's the power of leverage. Now, you do need to take things into consideration. There is a cost to borrowing that money, so that will get taken off the top, but it is significantly more return if you were to leverage a mortgage as opposed to buying all cash. So that's one of the cool things about real estate investing. You don't necessarily have to buy all cash. You can leverage bank financing. You can leverage other people's money, and it is so incredibly valuable. So incredibly valuable.